Good morning and welcome to the Forex Market Wrap from Pepperstone on Tuesday the 25th of July 2017. I'm Darren Sinden. Without further ado, let's move on to have a look at overnight changes, any price moves that we need to be aware of. Not much action really, and I just wanted to exemplify that with this enlarged rectangle, red rectangle here. You can see a much quieter day in terms of price moves. Probably the biggest moves of the day in the Korean won against the US dollar and in euro sterling. But it shows really that things are quietening down ahead of this week's key data point, which is of course the Fed interest rate meeting, which starts today, but whose decision will be announced tomorrow. Speaking of events, let's have a look at what's on the calendar. Any events today that may move the market. It's a fairly busy calendar, but there aren't too many high impact events today. I flagged the most important ones here. So early on we have at 8 o'clock GMT the IFO survey from Germany, current assessment for July, the business climate and expectations looking forward. Those three figures all about how people see the German economy proceeding from here. And then at lunchtime at 1300 GMT we have some house price data from the States, the S&P Case-Shiller home price index for May, the house price index itself month on month for May, and then nothing major on the calendar here, at least until tonight around 2015. We'll hear from the Royal Bank of, or Reserve Bank of New Zealand I should say, Governor McDermott speaking there, and then we'll have data from New Zealand later on in the evening at 22:45 GMT. That's trade balance data, imports, exports and overall trade balance. And just one other item of note that didn't appear on the calendar, but I thought I'd mention anyway. Andy Haldane, the Bank of England's chief economist and MPC member, will be speaking at 1700 GMT today. So that's something to look out for as well. Right, breaking news and comment that's caught my eye overnight. First of all, South Korea's government has raised its 2017 growth forecast to 3% from the prior 2.6% as the country's exports grow sharply. Staying in Asia, or rather transporting Asia into Europe, Chinese warships will today join the Russian Navy for Baltic Sea exercises. Quite a strange juxtaposition that, Chinese warships exercising in the Baltic Sea. Dollar weakness will continue to support US equities and particularly tech stocks, says Morgan Stanley. We'll have a look at that concept in a moment. And also one that caught my eye is that the Spanish Prime Minister Mariano Rajoy is to reluctantly appear as a witness this week in a fraud case that dates back to the country's construction boom that came to a grinding halt, of course, with the global financial crisis. Now here's a chart of the Nasdaq 100 against the US dollar index. The Nasdaq here is in green, the dollar index in blue. I hear what Morgan Stanley is saying, but to my mind, much of the gains in Nasdaq were booked well before the dollar started to weaken predominantly. So I'd see that really as a supportive factor rather than an outright driver for growth going forward. But we shall see how that pans out. And let's take a look at food for thought, something for you to take away into the trading day and perhaps beyond. And the debt ceiling debate is back. The debate about the US debt ceiling is due to reignite in Washington. US government debt exceeded its $19 trillion limit in March 2017. It now probably stands around closer to $20 trillion. The US Treasury now needs to raise more money and must gain US lawmakers' approval to do so, or it will be forced to cut services and stop paying bills. So there's a genuine chance of a potential shutdown of the US federal government over the summer. And here's a chart taken from the Atlanta Fed database. We just see the sharp growth in US national debt. This blue line measures government debt in the US as a percentage of GDP. As we can see, it's broken above 100 and is pressing on closer to 110% of US GDP. So that's a big headache for Donald Trump, and given the policy vacuum in Washington, one wonders how easily that will be resolved. Right, please take a moment to read our risk warning. Trading CFDs and FX on margin can be a risky business. If you're in any doubt about the risks involved, then please contact your Pepperstone account executive. Thank you for your time. We look forward to speaking to you tomorrow.